Since the referendum on the EU membership was announced in February, the pound has been rising and falling along with the polls. While the bookies currently put Remain ahead, the FT poll of polls show the vote is neck and neck. While many vehemently debate what the outcome might be, one thing most agree on is that the results of Thursday's votes will move the pound. Here with me to explain how sterling might move is rates and currency strategist John Wraith from UBS. Welcome, John.
Thank you.
So we've seen a recent swing back in the favour of Remain with the cost of insurance decreasing. So it implies that the market is expecting a Remain vote, and a vote to leave would come as a surprise to the market. What do you think would happen as a result?
Yeah, I mean, certainly over recent days, the moves in sterling suggest the market is expecting a Remain vote increasingly. Therefore, a vote to leave would be the biggest shock, and we would see sharp further falls in sterling. It's already off around 10% over the past 6 months, but we could see falls over the coming months of the similar scale to what we saw, as shown here, during the financial crisis and when sterling left the ERM in the early 1990s. So possibly about the same again as we've seen over the past 6 months or so.
And what do you think would happen on the other side if we do see a Remain vote? Would there be there'd clearly be a rally in the sterling, but where do we think that would look like?
Yeah, there would. I mean, we've seen over recent days, sterling just in the past couple of days has rallied by around 3% on a trade-weighted basis, just as momentum seems to have swung back in that direction. So confirmation of a Remain vote would cause a knee-jerk strengthening anyway. There'd be some relief that the potential uncertainty of a Brexit outcome has been avoided. But I think any appreciation in sterling is going to be much more gradual. We need to see over the second half of the year whether economic data rebounds following a pretty soft first half of the year, which we think is certainly in large part, due to the uncertainty of the referendum. If we see the data improve, we see a more hawkish Bank of England, we see rate hikes potentially back on the cards by the back end of this year or early next year, then sterling could retrace most of these losses of the past 6 months.
And where is it compared to the other major currencies that are on there? If we take a look at this chart here.
Yeah, I mean, this shows you what's happened since the start of this year. So essentially in the past 6 months, this lists all the other global major currencies and shows how sterling has performed against them in percentage terms. Clearly, there's a wide range of different performances, but one thing is the same, which is that sterling has lost ground against every single one of these currencies. This is pretty clear evidence that the referendum is having a very UK-centric impact. So once it's out of the way, depending on the outcome, we will see a further move in all of these currencies.
And the numbers that I've been heard bandied about are sort of anything from $1.25 to about $1.50 in a range. And if we take a look at the next chart, how does that sort of compare in the context of history? How do we see that coming through?
Yeah, I mean, it's the chart we were looking at before of the various different currencies. As we said, there are lots of different scales of move because obviously all these other economies are moving around as well. We tend to look at things in a trade-weighted sense so that you're looking at it against the range of currencies essentially, which is what this chart shows. The red line is what happened to sterling in the run-up to and immediately after the financial crisis in 2008. The blue line is what's been happening over the past 6 months. So a similar pace of decline as we saw in the run-up to the crisis, and possibly, as I said, another sort of 15% of downside if the UK votes to leave. A similar sort of top to bottom decline to the one we saw when the financial crisis struck, and because of the UK's exposure to the financial system hit the UK particularly hard, we could see the same thing again.
Thank you very much, John.
Thank you.